Amy and Brian were investigating the acquisition of a tax accounting business, BLI Inc. As part of their discussion with the sole shareholder of the corporation, Ernesto Young, they examined the company's tax accounting balance sheet, and the relevant information is summarized as you see in the table there. So you see the values for the fair market value, the adjusted basis, and the appreciation. Okay, little footnote on the mortgage. The mortgage is attached to the building and the land. Now, Ernesto was asking $590,300 for the company. His tax basis in the BLI stock was $106,000. Included in the sales price was an unrecognized customer list valued at $153,000. The unallocated portion of the purchase price, that's the $91,750, will be recorded as goodwill. Now, first part of this question asks us, what amount of gain or loss does BLI recognize if the transaction is structured as a direct asset sale to Amy and Brian? And what amount of corporate level tax does BLI pay as a result of the transaction? All right, so here's the logic we want to follow here. The cash paid is going to be equal, well, yeah, let's put it here, $590,300. They gave us that information. Let me format this a little bit. Okay, next we have to consider the liabilities assumed. And the liabilities assumed were $144,950. Okay, if we add those together, we come up with the amount realized. So we'll go ahead and create just a little sum function here. Sum function, I mean. Right? That gets us $735,250. Now, we've got an adjusted basis. And the adjusted basis is given as $217,750. That's given to us. Right? So from there we can calculate a gain or loss realized. Recognized, I want to say. Let me make this a little bit bigger. That gives us $517,500. Okay, and then we're going to determine the tax by multiplying it by the tax rate. And the tax rate on this problem is 21%. Take that times 0.21. We get 108,675. Okay, now the next part of this question asks us what amount of gain or loss does Ernesto recognize if the transaction is structured as a direct asset sale to Amy and Brian, and BLI distributes the after-tax proceeds computed in Part A to Ernesto to liquidate his stock. All right, so what's the net cash received by Ernesto? Well, he gets the $590,000, right? And we start off with that. And then he's got to pay 21% taxes on it. So we subtract that out. And that comes up with $481,625. Now, he's going to recognize a capital gain of $375,625 on that. Okay, and here's how we come up with that. We have to take the net cash received and back off his basis. His basis was 106. Okay, and right there is where they tell you what his tax basis was, 106.